What's going on, everyone? Sal here, back again with another video. I typically do my 10 minutes on Wall Street daily recording on my phone, but today I actually wanted to, go on video and kind of talk about the market because these last couple of days I've been giving you some insight on how incredible risk-defying strategies are for your trading account. We've made 2 trades so far. Shout out to the people who followed me into those trades because we've made money on both of those trades, totaling about $2,300 in 1 week alone. We're going to make more trades next week, the next one coming on Monday afternoon. So follow me, Black Box Stocks number 3 on Twitter. With that being said, what am I seeing in the SPX and what kind of led me to have a very strong bias for the downside of the market? Well, if you have purchased my course or if you've watched me for long enough, you know I use a 10 and 25 moving average strategy. And if we see the 10 and 25 here, we see now the 10 is below the 25 moving average. That's my first sign already that there's been a change in the trend, which was very bullish, right? We had the market on the daily chart playing above the 10 moving average. That's a lot of power, right? That's a lot of bullish momentum. Now we're below that. So there's clearly a change in buying activity taking place here, and you can actually see it in the market on some of the smaller time frames that I also like to use before I make these trades that are typically 2 to a day and a half. If we look at the SPX, we saw the weakness really developing as soon as the 7th, the 8th of September, right? We had a monster August came in, right? Lost all that momentum up there at the beginning of September. And what we've seen so far is an inability for the S&P 500, which SPX is a derivative of, to be able to break out the 60 RSI. Now, if you haven't seen my how to use RSI properly video on my channel, please go and do that because I want you to be able to use this indicator properly. If you don't know how to use it, you're going to be out of money very quickly. But what you want to know about stocks that are losing value very quickly is that, one, they have an inability to trade above the 60 RSI in any time frame, right? In any time frame, but particularly these higher time frames, the hourly, 2-hour, daily, and higher. So if I'm looking to set up, right, a European style option play, which SPX is, a European style option, expires into cash in your trading account, right? You don't have to close it, but it's good to close it before the trading day if you can. What you would then see is that, okay, obviously it hasn't been able to break above the 60. It's beneath the 10 and 25 moving average, right? The macro picture of the U.S. economy, where we're struggling to get stimulus, right? The Democrats and Republicans are unable to find some kind of compromise into the election, then yeah, I want to be bearish, right? I want to say, hey, look, we don't have enough money to keep this thing going, right? We can't allow, 20, 15, 20 million people who are unemployed to go into the holiday season with no money, right? What does that mean? That means that these high flying stocks, right, that are in retail, that are in, IT or general IT, are not going to be able to generate the kind of revenues that will justify the valuations, right, if they continue to go higher. So as a market represents, right, the minds of millions of investors, sure enough, people are taking their cash and walking away, right? Because that's what you're supposed to do, when the political environment is unclear. And it's clearly showing in the chart where people are just not sure about, where the economy is going, whether or not we're going to get any more stimulus. And if you're an investor, you've got to say to yourself, look, if this run is over, then we're going to find out as soon as Wednesday of this coming week. I'm talking the 23rd. All right, the 23rd of September. We're going to find out because, as you can see, we're holding on to dear life here at the 40 RSI. This is a level, if we break below, we haven't been there since, March, since really, the beginning of COVID and the situation where we find ourselves in today, right? So there's a long way down if bulls do not show up on Monday and Tuesday of next week. We've got a couple other stocks to talk about, but I really wanted to talk to you guys about that. Get my course. Get my course, NoDirectionTrading.com, to learn more about how I kind of see the markets. But let's hit on some other tickers while I have time. All right, Tesla. It's all about battery day here, but I do see some weakness developing in Tesla. Let's go zoom in a little bit on the hourly chart. As you can see here, this is also now having a little bit of problem maintaining bullish momentum, right? Bullish momentum requires the stock to be above, it has to at least get above the 60 RSI. And we're seeing now the 25 moving average is now above the 10 moving average. So let's see what happens next week. But again, today's trading in Tesla, although it had a good day, up 4%, all right, it did gap up, but the intraday move wasn't very enticing, right? It was not a very enticing move. You made money if you were in it last night and you opened up higher today, of course, but we'll see what happens there next week as well. NVIDIA, it's another stock that, again, following very much the S&P 500 in general, not interesting there. Apple, same thing here too as well, right? A lot of people have made a lot of money in this stock, but now things look to be going in the wrong direction. A lot of weakness there. Zoom, not too bad today. Very impressive with Zoom. They had some news out. Go ahead and look that up. Hourly chart looks still very, very strong on Zoom, right? Last I checked, the situation we're going through with this pandemic is not over. So Zoom has a lot of people buying and using their services that are going to be continuing to do so for a very long time, even though we are starting to see some people slowly go back to work. But for the most part, anybody who's working from home doesn't really want to go back to the office. Not anybody I know anyway. So Zoom continues to look very strong there. A couple other companies I want to talk about. DocuSign, I'm a bit of surprised at what I'm seeing here too, because just like Zoom, they should be a beneficiary of the situation we have going on here. They delivered some of the best earnings, if not, it was actually the best earnings the company's ever seen. So to see it sell off like this, quite interesting here. But I can see some buyers coming in next week. Only time will tell there as well. I've heard a lot of commentary about how this is going to be a move to value. When you hear people saying, move to value, they're basically saying that you're going to see people take their money out of momentum stocks and put them into, quote, value stocks. What is a value stock? Think basically industrials, think transports, think any company that trades with a very low PE ratio, that's been around for 100 years, that pays dividends, a good one, and has been paying for a very, very long time, right? So, those are companies that would be in a ticker like XLI, right? XLI is one of them, IYT. And when you look at these charts, there's a case to agree with them when I hear that, all right? So are people moving away from, the high-flying Googles of the world and Amazons of the world into the slow and boring? It could very well be the case per, these ETFs that represent that sector, right? Now, there are other ETFs that you can pull up that are a lot more concentrated that will help you out on that. And I'll talk more about that in my lives as well as in any future videos and see if we can catch up on that. But, if that does happen, that does mean a lower overall S&P 500. But not only that, but you're going to see a massive change in implied volatility in regards to those high-flying momentum stocks, right? Now, if you're a premium seller, right, you sell premium on, on Google, you sell premium on Amazon, you sell premium on these high-flying stocks, you're going to love that, right? Because, but now if you're a call buyer, right, you're going to really hate that. You're going to really hate that if that's the case. So it's your boy Sal. I really hope I've put out as much content as I can in 10 minutes. And again, get my course, follow some of my other videos that I've put out here. I'm going to continue to put out that strategy on how, we're making money practically every 2 days, tracking this market. Because what you'll notice is that, when the VIX gets elevated like this, north of 20, north of 30, it becomes very predictable, right? It's very, very predictable. You can lock the market into a certain area. I fear those, sub 20 VIX. I mean, 10 VIX, 12 VIX. That's where it gets scary because all you can do is, sell puts and just hope you don't lose, right? But when you got an elevated VIX like we have right now, you can really get into some defined risk strategies and kind of lock the market into an area. All right. So I really hope you've liked what I put out today. It's your boy Sal. Press like on this video if you could. I really would appreciate it. Until next time, take care.